And that's probably not what a lot of beginning traders want to hear.
Yeah.
They want to hear what?
Good morning, traders. Welcome back to another video. Today it's going to be a little bit different. I had a conversation a few days ago with Michael Toma. Michael's been on the podcast a couple of times with different episodes, different videos we did together. And I want to bring him back because I always get something new whenever I talk to him. There's always like something really important that I catch, that I hear that he didn't share before. So for me, it's really interesting to learn. And especially for you guys, I thought you could learn a lot about risk management. People have a very, very, very limiting definition of what risk management is, how you manage risk. And I think Michael's like the best to talk about a topic, to explain what risk is, what you can do. And this time we went to do a lot more. Michael taught me a lot about backtesting in the past, and I want to bring him back to talk about this and different topic. Now this is going to be a series of video, so instead of having only one big chunk, it's going to be like different videos published every week for some time. And so that you only have like 2-3 things to apply per video. Like I don't want you guys to be overwhelmed with 100 different ideas and stuff. You get like 1 or 2 really important things to apply every time. And make sure you take note as you watch this. Make sure you take this seriously. And I want to apologize a little bit for the quality of the video. It's not as good as what I usually publish. The definition of that's like a little bit bad. I'm using different software. But hopefully it's going to be fixed for the next one. And the first video today will be about risk management. You'll be introduced to Michael as well. And it's going to share some things that you have to think about beyond the stop loss. Stop loss are really, really simplistic way to see risk. But you'll get a lot more out of this. So if you like these kind of videos, give me a like below and comment what you thought and your question about this video with Michael. And I'll catch you back here at the end. Welcome everyone. I'm sitting down today with Michael Toma. We did a few episodes of the podcast before together, a few videos. He's awesome. Every time I speak with him, I learn something brand new that's super useful. So what's up, Michael? How are you doing today?
Good, Etienne. How you doing? Good to see you again.
Pleasure. It's really cool. Really, really cool. And last time we did a video back in Montreal, I think in September, was it? Or last year, a long time ago. Crazy. So we talked about that, and actually I think you guys liked it. I think you got some value. Today we kind of want to break this down into different parts. This is going to be a series of videos with different topics. And we're going to cover a lot of things, including risk management, trading strategies, backtesting stuff. Michael was really good at that. And traveling, because Michael was traveling to a lot. I think you're heading to, China soon? In Japan?
China next week, Japan intertwined there, and then we have Vegas for a Traders Expo, Florida, and probably Montreal in December. So it's been rough. I'm almost competing with you now, Etienne. You take the crown, but I'm coming in second place here.
So introduce yourself, tell people what you do a little bit, who you are, and just a bit of background about yourself.
Yeah, sure. Well, I consider myself a risk manager by trade, but I trade for a living. So I do corporate risk management and things like that. But really the crux of my existence and what I have a passion for the most is trading. Mostly derivatives, futures, options. Within those commodities, Forex, things like that. I do spend some time in the corporate sector as well. It kind of keeps me grounded. It kind of keeps me in the office sometimes, where this business could be somewhat intimidating and somewhat lonely at some point. So it's nice to have that little interaction, but once I'll do a certain project for a couple of weeks, I'm already thinking about, I got to get back to my charts, so it's a nice balance for now. I think I'll eventually swing more towards really trading on a daily basis, although we do trade on a daily basis, but really be in front of the screens. But again, when you travel, whether it's for business or pleasure, this is the beauty about this business. You can kind of do both. And right now, that's kind of my happy place. So we'll see where the future takes me. But the good thing is the corporate risk management principles really apply to my trading. So the exact principles that really are the foundation for my trading plan. So it's kind of goes hand in hand, and it's worked so far, and let's take it day by day. It's been 15 years now, so I guess I'm doing something right.
That's cool. That's cool. And this is really awesome when you start to apply what you have in your job to trading. I think most people don't do that ever. They kind of see this as two different things, like, I trade and I work. But when you can combine both and apply what you learn in one to the other, I think it becomes powerful.
The beauty of technology now too is, sometimes when I'm doing, say, an audit for an insurance company or a finance company, I kind of ask if I have like a quiet room. So, and the main reason is so I can have my little platform, my little, my iPad, so I can look at my futures prices and things like that. But and in fact, my trading plan is very heavy, obviously, on risk management. I'm a big believer that strategy is great, but, I can throw darts at prices, but a lot of this is about managing my risk, being compliant with my trading plan. And really, my trading plan, 90% of it was really just taken from my corporate risk audit risk management plan. So I feel that trading compliance is really the key to success. And believe me, if you ask me to pick, where USD CAD's going in the next month, I have no clue. But you know what? If you tell me about my risk rewards and how to assess those, identify and assess and control those risks, I'm that person. So that's my little platform. That it's a very narrow space, but that's really what I excel in. And then I hope really just the goal is that the numbers just play out, because really at the end of the day, for me, this is just math. It's all just math.
Game of numbers, like that. So back when we did the first video together and like the first two podcast episodes together, we talked a lot about risk. And I think people have a kind of limiting definition of risk. What is risk management? It's like, oh, like because of like how much you risk per trade. But there's more to it. And I kind of want to talk first about, you want to talk first about the thing that people do wrong or consider wrong with the risk. What are those exactly?
Yeah, well, I mean, and again, you mentioned, we did some work for the Academy, and, it really took a deeper dive into, risk principles and risk foundations. Some of the misnomers, I just want to talk about today is, one, a lot of traders, when they think about risk management, obviously is stop loss and minimizing risk and preserving accounts. But I look at it more of a holistic approach, which is more of like enterprise risk management. It's really risk management for your business. And really, in our limited time, if you just want to Google enterprise risk management, you'll really see like the wide scope of, it's not just about trading, it's about preserving your capital, preserving your business, reaching your profit goals. And again, there's not talk about red light, green light strategies. It's really about what are the things that can affect me in my business. One of them being, I talk to a lot of traders and do a lot of, coaching audits. Most of the time when traders fail, it's because of like spousal risk, I call it. Is you really want to get the spouse or partner engaged in what you're doing. Because let's face it, you're not going to come home with a paycheck every week. Some weeks are going to be great. Some weeks are going to be terrible. You want to make sure they're on the same page that, look, this is a process. And a lot of times I realize when you don't have that spousal support, it kind of just goes by the wayside. So that's just one example. Another one really, when we get back to stop loss, is one of the things that really frustrates me when I do audits. And again, this is coming from a risk manager. I'm all for stops. There are certain products such as options and things where you really don't need stops because your risks are already inherently defined. But I've seen time and time again where people put these stop losses too close. And, they think that's good risk management. It's actually going to slowly bleed their account dry. This is, you want a little soundbite, Etienne? Here you go. The risk manager is saying, move your stops farther away. Okay, now that sounds crazy, but put it in an area where you're wrong. The market doesn't care about your 0.5% of your account size. I'm going to risk 1% of my account. Market doesn't care about 1%. All right, but what it does is, look, if it's going to break through a certain key level, I know in your Bollinger Band strategy is going to break support and resistance. You're wrong, and you put your stop where you're wrong. So, let the market come and beat me. I don't want the market just to stop me out. And even though really it's just that variance, that normal variance and volatility that's expected in the market. So keep stops in an area where you're wrong or it's not working. And if it means lowering your size, do that. So keep it small, but give yourself some room. I see too many people increasing their size, especially after a good win streak, but they keep tight stops. It sounds like it's the right risk management, but it's a recipe for disaster.
Mm-hmm. And for someone starting out and being brand new to this, how would you recommend them to put their stop when they're wrong? Can they do it themselves? Or they have to maybe talk to a coach or read more books, more insights on how the market works? Or how does that look like?
Sure. Well, I would suggest all the above. Obviously we're big coaching, we're pro coaching, but a lot of back testing. It's a great vehicle. I love, when I mentor people to really throw the book at them as far as back testing. One, I want to get a level of their engagement. There's probably only one other person who's looked at charts more in their life, a number of hours looking life, and that's you probably, Etienne. We've done that, Saturday and Sunday mornings, like committed, our days off to back testing. You really get a feel for, the scope of where you'll be wrong. And then a lot of it is analytics. Getting in, doing back testing, whether it's software or manual, seeing where I would have been wrong, where's the uncle point, and then, using averages and I use standard deviations. I may really get into like sort of the metrics of it, but if you really want to keep it simple starting out, maybe average true range. I mean, that's kind of a starting point, because it kind of says, okay, well, if it's exceeded the average, then obviously it's going into territory that's quote not normal. That's a good starting point. Obviously, the wins and losses in P&L will determine a lot, and it's done for me too after all assessments. Is okay, I think I can give myself a little less room here so I can get a better risk reward, because the markets are telling me that historically I don't need to give that much room. But really, if you're just starting out, try ATR. It's a nice starting point. The high and low of the day, if it breaks that and you're on the other side, probably something's not really working right now. So, start with that and then work away. But, like you just said, Etienne, the business is all about work and, digging your hands into these things on Saturday and Sunday mornings. I say go for it.
Yeah. Is this something you recommend people to kind of sit down one day with a piece of paper and kind of write down all the risks they think about? Or how should they kind of find the risk around the trading?
Yeah, I mean, risk management, let's say it's not exactly, with all the stuff we have online and about trading and strategy, risk management really isn't, when you talk about risk management and trading, to be honest with you, I kind of feel like a lone wolf sometimes. We've done some work. There's not too many people out there who've done things like, to help traders in the form of risk management. But I would use, really kind of 3 words, to leave the viewers with: identify, assess, and control. If you could start there, it's 1, identify all the things that you feel is going to affect your business, affect your trading, affect your results, but also affect your business.
I think it's much better to see it as a business right away from the start as opposed to trading. Trading is kind of only for some people the chart and placing trade. A business like all around it. So communication, whatever you have to do in your business, so much broader.
Oh, I totally agree, Jen. And that's probably not what a lot of beginning traders want to hear. They want to hear what? Show me the setups, Mike. Yeah, that's great. Identify, assess, control, blah, blah, blah. That's great. Hey, where's the setups? And you try to give them that, but it's just a recipe for failure, because they really need the business core foundation stuff. By identifying the issues that can go wrong, assessment, is this really a big thing I should be concerned about? And then obviously controlling those risks through, and again, stop loss management's one of them, but quantity, size of what you trade is huge. I'll throw a kind of a crazy term out there. To notional value, we don't talk about it that much, but like say for example the S&P futures, that notional value, you're controlling $134,000 of notional futures of the S&P 500. I mean, some of these people with $10,000 accounts are trading 4 or 5 contracts. That's absolutely insane. I mean, it's not about stop loss. It's about, again, keeping it small. And again, the Forex market's a great opportunity to kind of keep things small just by the nature of the product.
So guys, I hope you like this kind of format. Comment below what you thought. As always, give me a like if you enjoyed this video today. Also, don't forget to subscribe. One more video like this every single day. And click the bell next to the subscribe button. It's going to give you a notification whenever I publish a new video, and you don't want to miss all of them, of course. So click that bell, click the subscribe button as well. And I'll catch you back here tomorrow. Next video for this series will be here next week. You can check out the playlist that's going to be linked below with all the series. And I'll catch you back here tomorrow. Ciao.